Good evening, everyone, and welcome to this session on Controller to FP&A brought to you by FP&A Professionals Institute. I have been speaking to a lot of CFOs. I've spoken to more than 300 CFOs in the last 12 months. And one thing that I regularly hear from CFOs is that it is extremely difficult to find the right FP&A talent. Why is that happening? Because the controller and rule book oriented tasks in the accounting world are getting automated, which means that more emphasis is being given today on analysis and business partnering oriented tasks. That is what we'll try and cover a little bit in this session today. A little bit about us before we begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed my 1-year executive management program from IIM Ahmedabad. Over the last 16 years, I've served as a CFO in India and across the Middle East, across various industries like oil and gas, advertising and marketing, software, public relations, and much more. I am now the co-founder at FP&A Professionals Institute. That is what Asif and I started somewhere at the end of 2023. I've mentored thousands of chartered accountants and finance professionals. Over the last 5 years, I've been an active online instructor and a mentor, and I've trained more than 5,000 professionals on various topics like FP&A, finance business partnering, CFO career coaching, and much more. I've also had the privilege of hosting and being part of more than 10 CFO events over the last 12 months and built a very vibrant community, CFO community of more than 200 CFOs across the Middle East. And I'm happy to have joined by my partner, co-founder, Asif Masani. Asif, a quick introduction from your end.
Thank you so much, Dhawal. Always a pleasure to join you on this webinar. So quickly about me, I've been working in finance FP&A for over a decade. Started my career in audit back in 2010 and then moved to FP&A in 2013. Started as an FP&A analyst with Citibank in 2013. And then my very recent role was with Coursera as the lead for APAC and India, which was back in 2023, November. That is when we started FP&A Professionals Institute. And so if you can go to the next slide, what we have had done over the last couple of years have had the privilege of bringing together experts and connecting to FP&A experts across the globe, right from North America, Middle East, Europe. And what we do at FP&A Professionals Institute is we bring in not just my and Dhawal's expertise, but experience of top FP&A professionals, CFOs, FP&A leaders, and we bring that through our courses, certifications, books, podcasts, and whatever we do at FP&A Professional Institute. So that's a little bit about me and FPI, and these are all the certifications that we have. And overall, we have trained more than 5,000 students over the last 3.5 years. So that's a little bit about FPI. With that, I will quickly give it back and Dhawal will start the webinar. Thanks.
Thank you. It's always a pleasure to partner with you. And one thing that I always have shared is an extreme passion to help finance professionals upskill themselves. So with that in mind, so let's quickly cover let's quickly talk about what are we going to cover today. It's going to be a quick 60-minute session. So get rid of all the distractions and let's focus on what we're going to cover today. We'll try and understand the difference between the controller world and the FP&A world, how a controller function is different from an FP&A role, what is the mindset shift that you will need to adapt yourselves to when you're working in FP&A, right? So that's the difference between controller and FP&A world. Then we'll try and understand some key activities in FP&A like budgeting, forecasting, management reporting with examples so that you're able to get that taste of how is it like to work in FP&A. And then finally, I'll share with you some tips and strategies of how do you transition from an accounting or a controller focused role to a FP&A focused role as well, right? So all in all, a power-packed 60-minute session. So get rid of all the distractions and focus on the screen. At regular intervals, I'll be asking some questions or asking you to put some responses in the chat box. So make sure that you are able to do that as well. Okay, so let's get started. So first of all, let us start by understanding the CFO's office, right? Now, a CFO is responsible for dozens of things in the company, but primarily we can divide them into 3 blocks of functions. One is the controllership function, then there is FP&A and treasury. The controllership function is required for taking care of the routine hygiene of the accounting and the finance function. That includes your AP, AR, GL, tax, statutory audit, internal audit, SOX audit, all the regulatory compliance related to the accounting field are taken in the controllership function. Now, mostly when you say a finance controller role, it is usually around the compliances and the statutory compliances. But some companies also have a role called as business controller. Now that must be pretty much commercial or FP&A related stuff, which we'll talk about it in a while. The second important function of the CFO's office is treasury, where the CFO needs to ensure that there is adequate cash in the business. You are able to assess the credit assessment of your customers, making sure that the credit lines are adequate from the banks, maintaining strong banking relationships. All of these things are part of your treasury function of the CFO's office. And then somebody needs to keep an eye on the performance of the business. So that is where FP&A comes into play with activities like budgeting, forecasting, different kind of financial analysis and commercial analysis. The main role of FP&A is to empower the CFO and other senior business leaders in the company to take prudent financial decisions. That is where FP&A comes into play. It has nothing to do with your accounting or compliance oriented function. It's largely based on the commercial side of things or business finance side of things. That is what is FP&A. Now let us understand the difference between the controller world and the FP&A world through some differences and conversations that are happening in both of these roles. How the conversations are different in both of these roles. Okay, let's try and understand some aspects of it. The focus in a controller role is around compliance, financial reporting, audits, different kind of audits, historical performance, reconciliations, making sure the accounts are complete. All of that is the focus of the controllership function. Whereas in FP&A, the focus is on forward-looking insights, where we are talking about activities like planning, forecasting, what are the trends, seasonality, what is the short-term forecast, long-range planning. All of these things are the function or the focus of FP&A roles. What is the stakeholder interaction? Typically, in a controllership function, you would be interacting with auditors, accountants, tax, regulators. That's your world in the controllership role. As opposed to that, in FP&A, you would be typically talking to the decision makers, the C-suite, business unit head, cross-functional team members, sales, BD, HR, and other team members, so that you are able to support them with various financial analysis for their decisions. Then, in terms of technology conversations, the controller world circles around the ERP, because ERP is something which is ensuring the transaction level data and making sure that the financial reporting is adequately captured, right? ERP, consolidation tools, reporting tools, these are some of the conversations, technology conversations that happen in the controllership world. Whereas in the FP&A world, you're talking about planning tools, business intelligence tools, how to improve forecasts, rolling forecasts, real-time forecasts. All of these things are conversations happening in the FP&A world around technology. Then budgets and variance analysis. In the controllership world, all you need to ensure is that the departments are adhering to the budget, or sometimes you look at the historical data and ensure that the actuals are not deviating too much from the budget. That's what is the limited scope of the controllership function. Whereas in FP&A, you're looking at budgets from a goal standpoint or a blueprint to achieve the next financial year's goals, or what actions you need to take to meet a certain shortfall in the forecast, right? Or what actions do you need to take to improve the pricing or margins? These kind of conversations are happening in budgets and variance analysis in the FP&A world. I hope this is giving you some perspective of how the controller and FP&A worlds are completely different from each other. Now let us understand a little bit more about FP&A through the day-to-day questions that might come to you. Again, I've selected a sample list of questions. This is not an exhaustive list of questions, but let's understand the day-to-day functioning of FP&A with some questions. What is Q1 revenue target for your department? Okay, so this is a classic question from your CEO or your business unit head asking to understand the target or the revenue target for their respective department. How much have you set aside for LinkedIn marketing for this financial year? And what is the quarterly breakup, right? So this is a classic question from a marketing director who would like to understand, okay, what are the different channels of marketing? How much have we allocated? How much budget can we spend? How much are we paying to the ad agency? What has been the return on ad spends? All of these are conversations around the marketing spends in the company that you will be managing, or marketing budget that you will be managing. Out of the 50 headcount additions that we have planned for the next financial year, how many are we planning to hire in Q2? Let's say if your company is planning to hire 50 more headcount in the coming financial year, obviously you won't be hiring them on January 1st. You will phase them according to the needs of the business, right? So this is the classic question from an HR director. How many can we hire in Q2? Are we on track to go ahead with all the hirings in Q2? Or do we need to tone down our hiring? Or do we need to cut back on our hiring? Or do we need to freeze our hiring or freeze our replacements? All of these kind of questions will come to you from HR or resourcing standpoint. How much new business do we need to achieve in Q4 to cover the shortfall in Q3? Sorry. A classic question from a CEO or a department head where the 3 quarters are already completed. You are entering the 4th quarter and the CEO or the business unit lead wants to know, okay, So there was, let's say, a $20,000 shortfall in Q3. How much do we need to, or how can we cover that in Q4 to meet our targets? So these are the kind of questions that will come to you in the day-to-day MD roles. What is the impact on profit if we drop our prices by 8%? Okay, classic scenario planning question. If we drop our prices, then what happens? If we increase our discounts, then what happens? All of these kind of questions will come to you as an FP&A lead, and you'll have to give them a decision. You can't lay a bouquet of Excel sheets in front of your business teams and say, hey, you decide what pricing you want to do. No, you'll have to tell them that, okay, here is what is the implication. We can go ahead and increase the price, or we can go ahead and increase the discount, right? So you'll have to give them concrete answers. Now, if you notice, all of these questions, okay, all of these sample questions that I've shared with you have nothing to do with your accounting standards or IFRS or US GAAP or any of the accounting rule books that you have learned in your accounting qualifications. These are all commercial in nature, okay? So that is what is a significant difference in the world. Don't try and look for your chartered accountancy or your CMA or ACCA framework, right? Hey, this is not something that I learned in my CMA, or this is not something that I learned in my CA. Yes, it is not, right? It was an academic qualification. The main job was to give you an entry ticket into the corporate world. It has done its job. Now get ready for the real work. That is what is FP&A. Now, what are some of the key components in the FP&A function? Now, no matter what kind of a company you go into, small, medium, large, these are the three main buckets that you will come across: budgeting, forecasting, and under management reporting, you will have variance analysis and profitability analysis. Okay. These are probably covering the 60 to 70% of your FP&A tasks. Okay. There'll of course be dozens of different kind of smaller tasks, but largely you would be involved in budgeting, forecasting, and different kind of management reporting or commentaries. Okay. Now let's spend a few minutes to understand each of them. Budgeting is an annual exercise or a one-time exercise carried just before the start of the financial year to come up with the estimated numbers for the next year. What would be my estimated revenue for next year, different levels of cost and different profits. That is what is budgeting. It is an annual exercise carried out just before the start of the financial year. For example, if you are taking calendar year 2026 as our financial year, then most of the companies now would be busy preparing their budget in Q4 of 2025, which will act as a blueprint as to what numbers do they need to achieve for the next financial year. Then comes forecasting. Forecasting is tracking the ongoing performance of the business. For example, let's say 3 months have passed in the financial year, which means I have actuals for 3 months. At the end of 3 months, we will prepare something called as a 3+9 forecast. Now, what is the 3+9 forecast? 3 months of actuals plus 9 months of forecast. Once the budget number is finalized, I will not be amending my budget number every now and then. What I will be tracking probably on a monthly or a quarterly basis is my forecast. Okay. A budget number once approved by the board, it is frozen, it is uploaded in the system, it is not changed every now and then. So what we keep tracking after that is the forecast to understand whether we are on track to meet our numbers or not. Okay, I hope you are able to appreciate the difference between a budget and a forecast. We'll come to an example and try and understand it a little bit deeper. Then comes management commentaries. Different kind of management reporting packs you will be preparing at the end of the month. Flash report, monthly report, quarterly report, margins report, revenue report, different kind of reports you will be preparing. And in order to execute these management commentaries, you will either be carrying out variance analysis or you will be carrying out different kind of profitability analysis. Now, variance analysis is where you are comparing different kind of numbers, different set of numbers, like actual versus budget, actual versus forecast, current quarter versus previous quarter, current month versus previous month, current year, year to date versus previous year, year to date. All of these different kind of comparisons you will be doing and coming up with the business reasons as to why there has been a variance. Okay. Then profitability analysis. Every management likes to dissect the profitability and understand where this profit is going to coming from, where this profit is coming from, and what are we doing well and what are we not doing well. Okay. Let's say if I tell you that the company profit is $100,000, and if you are the CEO or CFO of this company, you will not just be happy with this 100,000 number. You will dissect it and see, okay, what are my top 5 contributing products or departments? Or what are my performers and which are my non-performers? All of these kind of questions will come from profitability analysis. And if your company is structured branch-wise, you'll probably be doing branch-wise profitability. If your company is structured business unit-wise, you'll be doing view profitability. If your company is structured, let's say if your company is a retail company, you might be doing product-wise or SKU level profitability. All of these kind of different profitabilities are forming part of your management commentaries and management reports. Okay. I hope this gives you some idea of what is happening in the key, in terms of key activities in day. Now let us understand each of them with some quick examples. Okay. The first case study that I want to bring to you today here is a B2B revenue budget case study. Okay. we will be building an end-to-end B2B revenue budget for a B2B company, right? An end-to-end revenue budget for a B2B company. What I will be doing is I will be reading out the question, okay, and then build the budget from scratch. And in this process, I'll be asking you some questions at regular intervals. You will be putting your answers in the chat box, okay? Pay attention here. Here is a quick case study. Try and understand the situation. You are working with Infosys as a business finance manager, primarily looking at client contracts, BU profitability, and BU FP&A. So Infosys is a large company. You're working with one of the business units and you're responsible for business unit FP&A. Infosys is a B2B software company providing services to various clients. B2B, business to business, which means a company which is catering to other businesses. For example, Amazon Web Services, AWS, is a B2B business of Amazon, whereas the e-commerce business is more of a B2C business where you are catering to the direct consumer. The revenue generated by Infosys is largely split between retainer contracts and projects. Now, what is a retainer contract? Either you are billing a fixed sum of money every month or you are billing basis a fixed rate. For example, let's say I have a contract with a US company where I have deployed certain engineers and team leaders. I'm billing, let's say, $200 per hour for a software engineer, $300 per hour for a team leader or something like that. Or it could be a fixed amount, $15,000 retainer, $20,000 retainer. Projects is project-based billing. It could be a 3 months, 6 months, 12 months project. And I will be billing my client basis certain milestones. Okay. It could be a 3 months milestone. After 3 months, I'm going to bill 15%. After 6 months, I'm going to bill 25%. Whatever is the milestone, that is a project-based kind of a billing. You are required to work with the business lead and prepare revenue projections for 2024. Assume that you are at the end of 2023. You are building your revenue budget for 2024. Senior management guidance is to aim for at least 12% revenue growth over 2023. That's the senior management guidance. They're asking us to aim for at least 12% revenue growth. We'll see whether we'll be able to deliver that or not. Assume that we are now at the end of December 2023. Okay. So this is a quick case. I'm going to be a little bit fast here, so pay attention. We can take questions in the end as well. So, so this is the case. And now as a FP&A professional, what I'll do, classic, I'll build my templates. I'll get my historical data ready. I'll get my templates ready. And I'll start my conversations with the business unit lead. Okay. So here is what I'm trying to build. I have my client-wise details, whether it is a retainer or a project. My 2023 revenue, which was roughly 125.8 million. If it is a retainer, then what is a monthly retainer? And then now here from Jan 24 to December 2024, I'm going to populate my revenue for the year 2024. This is the discussion with the business team. Now I had the discussion with the business teams, with the project managers, with the client relationship managers and everybody. And I've captured some notes here. What I will now do is take these notes and try and give effect to these notes to build my end-to-end revenue budget for the company, or for my business unit. Now let's look at these points one by one. I'm going to be a little bit fast here, so pay attention. Visa will renew its contract for 1 more year at the same rate. So Visa is paying us $1 million per month. So they will renew it at the same rate. So I'm going to continue the same revenue till December. $1 million. Okay. Second point, Bank of America contract ends June 24 and there is a strong possibility that they may not renew. Bank of America is paying us $500,000 or $500,000 every month. They will continue the contract till June 24 and after that they will not be renewing their contract. That is what is the assessment of the business unit lead. We don't know at this point in time what is going to happen in June 24. We are in the end of December 2023. But right now, our assessment is that they are not going to review the contract with us for whatever reason. They might go into an RFP, they are looking for a new vendor, whatever might be the reason. IBM has agreed to renew its contract with an escalation of $100,000 per month. IBM is paying us $1.4 million. They are ready to escalate the revenue by $100,000. So $1.5 million till the end of the year is the renewed contract. Fourth point, ExxonMobil has decided to discontinue our services from 2024 onwards. What happened here? ExxonMobil, which was our largest client, our biggest client in 2023, has for some reason decided to discontinue our services from 2024. They have already given us a notice. Okay, whatever might be the reason, they might be looking for new vendors, they're going into an RFP, or they have already started a relationship with some other company. We don't know. Whatever might be the reason, they have decided not to continue with us from Jan 24 onwards. So we have lost that revenue. Now you must be thinking, okay, so what's going to happen with the people who are working on that client? Are we going to sack them? Wait a minute, let's figure out. Okay. Right now, we are looking at only the revenue side of things. Talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st of March at $3.5 million. Okay, great. So we lost one client, but we also won another client. Okay. And this client is going to start from March 2020. Asif, there is some background noise if you can mute. Okay. So Microsoft is going to start from March 2024. Now we are in December 2023. So what typically happens in large B2B services businesses is that once the client has given us a confirmation that they are going to start, right? They would still be, looking at the legal teams spend a lot of time on discussing the contracts back and forth, and it takes some time for us to actually commence the work, right? So we are anticipating at least 8 weeks of delay in starting the work, or 8 weeks to start the work. And then 1st of March is when the tentative start date is for Microsoft's retainer, which is $3.5 million. Okay. Then L&T has asked for a scope and fee reduction of 20% from April 24 onwards. So L&T is paying us $1.5 million per month. Okay. And from April 24 onwards, the scope will come down by 20%. So the retainer is going to be reduced by 20%. That is reducing by $300,000. So $1.2 million will continue till the end of the year. Okay. Now, whatever might be the reason. So maybe some projects are over. So we don't want the same level of resources to be deployed on the client. Right? So we are withdrawing back some resources, whatever might be the reason. We are reducing it by $1,200. We're reducing it by $300,000. Okay. The next point is Sajjad, is there a question? I see you unmuting every time. So, okay. Sajjad, if you can mute, we will take the questions in the end. Thank you. So, Minister of Tourism are planning for a bigger project, roughly $4 million, split equally between April and May. So, Minister of Tourism did a $1 million project with us in the last time. Okay. So, in the last year. Now, this year, they will be doing a $4 million project. So, split equally between April and May. Now, remember, I am at the end of December 2023. Now, I'm putting it as a placeholder. That doesn't mean that this will actually start on 1st of April. It may start on 7th of April. It may start on 10th of April. In which case, I'll prorate it in the next forecast, in the March forecast. Right now, I'm at December 2023. And according to the information now, this will be split equally between April and May 2024. Okay. Last point, management aims to achieve an overall revenue growth of 12% over 2023. Okay. So if I have to look at a 12% revenue growth over 2023, which was $125.8 million, that would roughly be about $141 million. You know, I'm just multiplying this by 1.12. So that will be roughly about $141 million. Okay. But basis my discussion with all the business unit lead and the project managers, we are looking at only about $87.3 million. Okay. But the management intends to do $141 million. So how will we do that? Any ideas? Type your responses in the chat box. What can be done? Let me repeat the question. I took stock of all my clients and I know that my clients are signing or they have signed the contract for only $87.3 million. But the management wants to achieve $141 million. So there's roughly a $50 million gap. What can be done about this? Type your responses in the chat box. You are the FP&A lead of this business unit. Okay. Vivek says new projects, new clients, new business, more marketing, new customers, new projects. Okay. Talk to sales and marketing to add new projects. Okay. Increase rates. So that is not possible. We have already spoken to all our existing clients. So they have renewed the contract and they have given a confirmation that they will renew at these rates. So increasing more is not possible. Okay. Most of you are thinking in the right direction about new business or new clients. So let me tell you what happens typically in a services or a B2B services business. Okay. You will be consistently or rather constantly pitching to new kind of clients. Okay. At a given point in time, you would be probably pitching to 10, 15, 20 different kind of clients. There will continuously be RFPs coming your way. You will be working on those RFPs. You will be submitting a bid. You'll be pitching on new business continuously. So what you need to do as an FP&A professional is keep an eye on your new business pipeline. Okay. And this is going to come from new business. The gap is going to come from new business. Now that we have narrowed down that new business is something which I will need to hit a $141 million mark. But how will I show that in the Excel sheet? I need to complete this Excel sheet and then submit it to the CFO or the CEO for approval. Now there are two ways to do it. One is you can just add a new business line item and spread it equally or basis your assessment. That is one way to do it. A little bit better and a scientific way to do it is put some client level placeholders. For example, I can say we will win client 1 at let's say $3 million. Okay, $3 million in April, and this will go until the next financial year, so December. Okay. Then let's say client 2 as a placeholder, again as a retainer. Let's say I'm winning this in May at $2.5 million. Okay. Now we are at $134 million, still some gap. Now, like how we won the Ministry of Tourism project, we could win more projects. Okay. So there, I'm estimating that we are going to win at least a $2 million project every quarter. Now I'm putting it at the end of the quarter only as a placeholder. It doesn't mean that it will come on 31st of March. It might come anywhere. It can come on 11th of January. It can come on 10th of March. I don't know. But right now, I'm just putting this as a placeholder. Let's see where we have reached. We have reached at 13.1%. We don't need to give excessive revenue also. So let's tone down a couple of projects. 12.3% is good. It's above 12%. Okay, let me see what happens if I reduce another 1,000. I fall below 12%. Okay, so this is fine. So 141.3 million is something that I will go ahead and submit to the management. Okay, now you must be thinking, how did I put these as placeholders? Now, let's say my new business pipeline has 10 clients. In those 10 clients, if you ask the business teams, they will tell you that these are 2-3 clients where we have a strong chance of winning. These are three to five clients where there is 50-50. And these are the 2 clients which is a long shot. We may not be able to win that project. Okay. So this way you will narrow down on high probability clients and then put that as a placeholder tentatively from the respective month to start. Okay. Alternatively, look at it this way. Okay. With such a big team, are we not able to even win 2 clients in a year? 2 clients in the whole year, right? So now this seems to be realistic, isn't it? Now, this $141.3 million of revenue, B2B revenue that we built for the business unit is split into 2 parts. One was the first $87.3 million, which we saw from existing clients. That is called as confirmed new business or identified new business. And then whatever placeholder we put as client 1, client 2 and projects, which is $54 million, is called as unidentified new business, which means I don't know where this business is going to come from, but this is going to come from some client in the pipeline. Okay. Now a question for all of you, and I type your responses in the chat box. You will see that out of the total new business or the total business that we need to achieve for the next financial year, $54 million, which is roughly 38% of it, is unidentified new business. Okay. What do you think, in your opinion? Is 38% high or low? Just type high or low in the chat box. Okay. Vivek says high. Come on, I need some more responses. Is 38% unidentified new business high or low? One says high. Come on, I need some more responses. Okay, high. Okay. So many of you are thinking that this is high, which are probably right. Okay. Now, let me tell you how this works. If the last 3 years' historical average tells you that you have easily achieved new business in the range of 35 to 40%, then this 38% is not high. But if the last 3 years' historical average has been somewhere in the range of 15 to 20%, then this 38% is high. Then you need more than just a pipeline evidence. You need probably a confirmation. You need probably a concrete mail from a client or something to put this 38% unidentified new business. Otherwise, you will have to coach your management to stick around to 15-20%. You'll have to sensitize them and tell them that, hey, this has never been achieved before. 38% unidentified new business has never been achieved before. Okay. So that's how the identified and unidentified new business works. Now, Manu has an interesting comment. He says, depends on industry to industry. Okay. So while you're looking at things within your industry, but what you're saying is absolutely right. It also depends from one industry to the other. For example, take the example of a audit firm. I know that once I sign a client, probably this client will remain with me for probably 5 years until the rotation policy is applicable, which means I can expect or anticipate my audit fee revenue for the next 5 years with this client. As opposed to this, take an example of an interior design firm or an architecture firm. They operate from project to project. They don't have retainers, right? They operate from project to project, which means there the unidentified business could be as high as 60-70%, which means I don't know where 70% of my revenue is going to come from in the next financial year. It will come from some project in the pipeline, which means higher the unidentified new business, especially in a services-based business, more difficult it is, more challenging it is to plan your payroll, to plan your new hires, to plan your increments. Okay, that is a challenge you will face in a B2B services kind of a business. Okay, I hope you got some idea of how an end-to-end revenue budget is built in a B2B services company. B2B services company is heavily people oriented. Probably 40 to 50% of your revenue will go into people cost. Okay. Now you must be thinking, okay, Dhawal, there are about 7 to 10 clients here. So this was very easy to build in 15 minutes. But what happens in the real world? Now, what if there are 800 clients? Okay. Now I'll tell you what happens. Typically, those 800 clients, you would divide them into your top tier clients. Okay. Let's say the top 25 clients are comprising of 50 to 60% of your revenue. There, you'll probably do a one-on-one meeting with the business unit lead or a project lead and spend enough time to compute that revenue or populate that revenue. For other 750 clients, you will create a template, send it to the sales staff. They will fill in the template and send it back. Or you have your CRM tool or a contract management tool where you have the updated contracts or the discussions that are recorded by the CRM, by the customer relationship managers. Okay. And then you download the data from the CRM and then populate your numbers and then get it approved by the sales head or approved by the business unit head. That's how you will be doing it. In a real life situation, you will probably get week to 10 days to do this, the first cut revenue budget. Okay, you don't need to do it in 15 minutes. Okay, I hope you found this valuable. If you found this interesting, just type interesting in the chat box so that I know how many of you found it valuable. Just type interesting in the chat box. Okay, this is how an end-to-end revenue is built in a B2B services company. This is just one example. Now, the end outcome of a budget looks pretty much like an income statement or a P&L statement, right? Where you have your estimated revenue, different components of your costs, and then your operating profit. We just saw one component, that was B2B revenue or revenue budget. Okay. If it is a B2C revenue, what you would be doing? Same stuff. Okay. You would be sending the templates to the sales team to fill in the quantity of the estimated sales by client, by product, whatever. And then you will be liaising with the pricing team to understand what would be the estimated pricing of products for the next financial year. So price into quantity will be your revenue for the next financial year. Okay. I hope this gives you some idea of what is happening in the B2B revenue space. Now let me do one thing. I will share this Excel sheet in the chat box. Just download it. And once you download it, just type done in the chat box, just in case if you are interested to download it. I'll wait for 30 seconds. I have put the Excel working in the chat box. Just type done in the chat box once you are done with your download. Okay, I see a couple of dones. Okay, let's get back to the slides. Okay, so out of the 4 components that I had shared with you, budgeting, forecasting, we saw one example that was for budgeting. Now we will move to forecasting. Okay, now let us understand this example. Okay, it's an oversimplified budget that you have. The top table that you have is an oversimplified budget. Sorry, there's some comment in the chat box. Could you repeat the price into quantity? Yeah, sure. So we saw the B2B services company, but what happens in a product-based kind of a company? What you normally do is you send out the templates to fill in the estimated quantities, sales quantities by price, by product, by customer, whatever, to your sales team. They will fill in the quantities and send it back to you. Typically, there's a pricing team or the FP&A team might themselves be computing the prices of various products or a price list of the various products. So you will plug those prices and the quantity received by the business teams. Price into quantity will give you the revenue number. That's how you will build a revenue in a product-based kind of a company, revenue budget. Okay, I hope Manu, that answers your question. So once you understand a little bit about the budget, let's try and understand more about the forecast. The top table that you see is a typical budget that is built. Again, oversimplified example, right? 2 to 3 lines only. There could be probably 25 lines, right? But this is just revenue, cost, and profit. Okay. Here you have the representation which says BUD, that is budget. We have a Jan to December budget here. And according to the budget, we are going to achieve a $1.35 million revenue in the coming financial year. Now, what is the forecast? Now we are at the end of Jan 2024. Remember, budget was prepared in December 23. Now we are at the end of Jan 2024 and we have our actual numbers for January. Okay. At the end of January, I am going to test whether the assumptions that I had during my budget are still holding good. If not, then I'm going to revise my numbers from February to December. This is what we typically call as a Jan forecast or a 1 plus 11 forecast. 1 month of actual plus 11 month of forecast. Okay, you see the representation here, it says FOR, forecast. Now here, coincidentally, the assumptions are remaining the same, which means I'm saying that whatever was budgeted number from February to December, I'm capturing the same numbers here. Now this could very well be different. This could be 107, this could be 103, 104, 102, whatever. Okay. Now let's progress a bit. Now we have reached at the end of Q1. We have reached at the end of March 2024. Okay. Now we have 3 months of actuals. In some months we did not do well. In some months we did exceedingly well. At the end of March, again, I will test my assumptions that are the budget numbers still holding good. If they are not, I'm going to revise my forecast from April to December. So this could be 104, 102, 105, whatever. Okay. Here I'm maintaining the same numbers to for simplicity. Okay. My forecasted revenue at the end of March 24 is 1.36 million as opposed to my budgeted revenue of 1.35 million. So what do we call this? We call this a 3 plus 9 forecast. 3 months of actuals, 9 months of forecast. Now, whether to do a monthly forecast or a quarterly forecast depends on the size and complexity of your business. If your business is a very simple, boring kind of a business, let's say oil and gas, okay, Nothing major happens overnight in an oil and gas business. Yeah, long cycles. To set up a refinery, it takes 5 years. So even if your competitor announces a refinery, you still have 5 years time, right? So nothing major happens on a month-on-month basis or a day-to-day basis. So there, a quarterly forecast is good enough. But if you're in a volatile business, let's say like e-commerce, okay, or insurance, right? Anything can happen overnight. There you need a monthly forecast or a forecast. Okay, I hope that gives you an idea about the difference between a budgeting and a forecast. Classic FP&A interview question. Can you explain the difference between a budget and a forecast? A budget is a one-time activity prepared before the start of the financial year to come up with estimated numbers for the next financial year. Whereas forecast is tracking the ongoing performance of the business either on a monthly basis or on a quarterly basis. It comprises of actuals for some months plus forecast for the other months or the balance period of the financial year. Okay, I hope you are able to appreciate the difference between budgeting and forecasting. So we understood budgeting, we understood forecasting. Now let's understand one example on management commentary. Again, I'm not going to spend too much time on this. I'll just show you one example. Now, in your management commentary, you will be preparing hundreds of different kind of reports. One typical report will be something called as a revenue bridge or a cost bridge, which will tell you the reconciliation between what is happening from one point to the other point. Now here in the example on your screen, you have your revenue budget for 2024, which is your actual revenue budget. Okay. And you have your budgeted revenue for 2025, Okay. Now this is called a waterfall chart where you're trying to bridge the gap, understanding this variance between 55.3 million to 35.9 million, breaking them into two components, price variance and volume variance, right? You'll notice that price on an average is increasing 14+% in all the products. And in terms of volume, cup and cone have been doing well. Sandwich and sugar-free ice creams have not been doing well. And I'm adding a nice action title or a headline to this as well. Okay. So this is just one example of a chart or a portion of your report that you will be including in your management commentary. Now, similarly, you will do different kind of analysis, profitability analysis, variance analysis, top 5 analysis, quadrant chart or a 2x2 matrix, leaders, laggards, whatever, right? N number of different kind of management reports. Okay, I hope this gives you some idea of what happens in management reporting. Now, in your FP&A role, right, one thing that will be very unique is different kind of stakeholder interaction. At regular intervals, you will be collecting a lot of inputs and updates from various cross-functional team members like HR, sales, marketing, production, supply chain, different business teams. And then you will regularly be providing them insights and reports for taking certain decisions. Okay. Now with HR, you will be talking about workforce planning, headcount planning, salaries, increment, incentives, right? With sales, you will be talking about revenue forecasts, pipeline, quality of the pipeline, sales performance metrics, incentives, commissions. Right? With marketing, you'll be talking about marketing ROI or ROAS, return on ad spends, campaign performance, marketing spend allocation. Right? With production and operations, you will be talking about capacity planning, plant utilization, excess capacity, productivity, yield ratios, cost efficiency. Right? With supply chain, you'll be talking about inventory management, working capital optimization, freight cost analysis, make or buy decisions. All of these things you will be talking with supply chain and analyzing and providing them different kind of reports. Okay. Yes, Vivek has a question. What about the mixed variance? Yes, again, mixed variance is also one of the things that you will be looking at. So these are the different kind of interactions that you will be having with various cross-functional team members. Okay. I hope this now gives you some idea about what happens in FP&A roles. Okay. Now that you understand a little bit about FP&A roles, now how can you transition into an FP&A role? You could be working in accounting, audit, tax, whatever. How can you transition into an FP&A role? Okay. There's no one shortcut to do it, but there are certain techniques that you can adopt. One of the things is try and leverage a sector experience. For example, let's say if you're working in accounting, audit, or controllership function in an insurance company, try and look for an FP&A role in an insurance company. Why? Because at least you have industry familiarity. At least you understand the same terms. What's in insurance, what is reinsurance, what is the claim ratio. You understand all of these things. Now, study different kind of management reports. Even when you are in an accounting role, try and make friends with your FP&A roles or your commercial team members and understand some of the reports as to what they are doing in terms of profitability, management reports, monthly commentaries. What are they doing? Make compliance your bridge. If you're in an audit role or in a consulting firm, okay, use your compliance knowledge as a bridge to move over to the other side in the accounting world or in the industry side, and then slowly pivot yourself into FP. You can try for a hybrid role as well. For example, let's say there is a small and mid-size kind of a company, which has, let's say, a CFO, 10, 15 people under him. So they might be looking for hybrid skill sets. Somebody who can do budgeting as well, somebody who can handle a statutory audit as well, right? So that is your best bet. where you can start with a hybrid role and then try and move into a pure play FP&A or a commercial kind of a role. Learning Power BI and Tableau can be a plus. Again, these are not substitutes for your conceptual FP&A understanding, but this might slightly give you an edge when you already have FP&A understanding and then you're trying to give an interview where they might be asking for some tool experience. Create a reason with a certification or a qualification. Today, you are living in an online world, right? Back when Asif and I started, it was 20 years ago, right? So we did not have LinkedIn, we did not have the online world, where we did not have resources where we could understand what truly FP&A is, right? If our seniors are in a good mood, they will teach us. If not, then we'll try and make our own set of mistakes and learn. But today you have opportunity to learn from expert faculty, expert leaders. Today, we live in the online learning world. The best part about online learning is that you can learn to be an entrepreneur from an entrepreneur. You can learn to be a CFO from somebody who has been a CFO. You can learn to work in FP&A from somebody who has worked in FP&A. Right? That's the beauty of learning it at your fingertips. Right? So try and leverage the certifications and the qualifications that are available out there on FP&A. Now let's do a quick recap. So we tried to understand the difference between the controller world and the FP&A world. What is the focus? What are the technology conversations? What are the reporting conversations? Try to understand the difference between controller world and FP&A world or commercial world. And then what are some of the key activities in FP&A? Budgeting, forecasting, management reporting. And we saw examples for each of them. And then I gave you some tips about how do you transition into FP&A world or FP&A, some tips about transitioning into FP&A. Okay. Now, we keep talking to hundreds of CFOs. We have done our own internal survey and we have identified 5 critical skill sets that CFOs today are looking for in their finance team. Which are those 5 critical skill sets? First, core FP&A concepts. Budgeting, forecasting, margin analysis, variance analysis, management reporting. All of these are core FP&A concepts. Financial modeling. Financial modeling specific to FP&A, not related to valuations or leverage buyouts and all of that stuff. Financial modeling related to FP&A, which is revenue models, cost models, business model canvas, scenario planning, sensitivity analysis, trend analysis. All of these things are specific to FP&A. Then comes your data storytelling. Yes, you can analyze 10,000 lines of Excel sheets, but when it comes to business, you can't lay this bouquet of Excel sheets in front of them and say, hey, you decide what you want to do. You should know how to communicate with the business teams, what visuals to use, what message to give, what narrative to craft. That is where storytelling comes into play. So, 15 minutes. Thank you. So then comes business partnering, right? Business partnering is 2 things. One is your ability to understand the business. That's your business acumen. And then ability to build strong cross-functional relationships so much so that you can influence the business teams, right? You need to influence the business teams and help them take a certain decision. It's not just about providing reports or dashboards and let them figure out whether they want to, what they want to do in the business. It's about influencing them at the right point in time. And then, of course, leveraging the technology and AI developments that are happening in the finance field, to become far more efficient and effective in your finance roles. Now, with these core skill sets in mind, the numerous surveys that tell us, and here is one of the insights from the survey. Almost 8 out of 10 CFOs say that it is generally difficult to find the right FP&A talent. Why? You must have seen the vacancies. Everybody is asking for experienced FP&A talent. 5 years, 10 years experience in FP&A. How is that even possible? Everybody wants experienced FP&A professionals, but there are not enough experienced FP&A professionals out there. And so that's why they are finding it difficult. So what can be done? So with this mission, Asif and I had quit our jobs a couple of years ago, and we have developed our own certification program. It's called Certified Global FP&A Professional Program, the CGFPA program. CGFPA program is a global certification built and delivered by CFOs and FP&A leaders and not by university professors. Comprehensive 10 modules, which we'll talk about in a while, all through practical examples, real-life case studies on various industries, some on services, some on edtech, fintech, manufacturing, trading, right? Then you'll be part of a global alumni network. CGFPA program has been taken by students from more than 25 countries now. We have a very active alumni community. You'll get sessions with a personalized career coach. You'll get placement support. We have our own portal called fpnajobs.com. We have an in-house recruiter who is trying to establish certain relationship with corporates to bring recognition for the CGFPA. Okay, again, I don't want to overpromise, but we'll try everything in our power to kind of help place our students in FP&A roles in various companies. Access to Q&A sessions. You will get access to the faculty. You can ask any questions to them live, right? Yes, the placement support is in India and Middle East at this point in time. That's where we have a very good network of CFOs, of people where we can approach to place our students. Then access to external speaker sessions. Globally, top FA leaders, tool providers, automation companies come to FPI, to train our students, okay, through various guest sessions, which we do every month. And all of this is available to you through a seamless online LMS. All our live sessions are conducted on Zoom. notified to you well before in advance, right? So that you can access all of these through the ease of just clicking a button from your mobile phone. Okay, that's what the CGFP program is. Now, what does the CGFP program cover? There are 10 exhaustive modules in the CGFP program. Asif, would you like to cover the 10 modules? Or show the flow chart, or you want to cover it here?
We can cover it here.
Okay.
So let me talk about the budgeting forecasting. Start with that. So budgeting forecasting is one of the core modules where we teach fundamental budgeting and forecasting methods. So top down and bottoms up budgeting, incremental and zero based budgeting, traditional way of doing the budgets versus the rolling forecast. Different components of a budget, right from the revenue budget to cost of goods sold, to OPEX, to salary and headcount, to CapEx budget. So entire what we say is, how do you do budgeting end to end for different components of the income statement? And also we cover a capstone project, which you have to prepare the budget of a company step by step and then present as if you're presenting the budget to the CFO. Then AI for finance is, I would say, a fairly recent addition to the CGFA program. We added it this year, and we do one live. I would say we do 4 live sessions on whatever is the recent updates on the applications of AI and generative AI in finance and FP&A roles. We cover tools like ChatGPT, Gemini, Claude, um, and then there are very specific tools for specific reporting purposes, forecasting purposes, which are used as AI agents for FP&A and finance roles. So the next live sessions for that is planned in November, which is also a part of the CDFPA program. Then what you have as a core module is the management reporting. Management reporting, as we already saw some of it during the webinar today, but we do detailed case studies on topics like variance analysis, profitability analysis, different types of management reports like month-end reports, flash reports, and then there are more in the curriculum. And then performance management frameworks. Some examples are OKRs, KPIs, balance scorecards. All of that is covered in the curriculum using examples and case studies. Let me talk about the financial modeling module next. So this is financial modeling very specific to FP&A. I think Dhawal mentioned about this earlier in the one of the slide. So use cases which is very specific to FP&A. How do you build revenue and cost models? How do you do scenario planning and sensitivity analysis? How do you build a 13-week cash flow forecast? How do you do long range forecasting? How do you do 3-year budget? How do you do 3-year plan using best practices of financial modeling? So all of that is covered in the financial modeling module. You want to take the next set
Yeah.
of modules?
Thanks, Asif. So coming to the modules on the right, so any role that you take on, one thing that is common is that you'll be dealing with large sets of data, both financial and operational data. That is where you need to know your way how to navigate through this data. So that's why in the data analytics module, we are covering the basics of Power Query, Power BI, and SQL. Okay. We don't claim to make you an expert in this, but at least we take you to a level where you are comfortable using these in your FP&A roles. Then comes financial analysis. Financial analysis is not just about ratio analysis. A lot of internal analysis is done by the CFO and his team in terms of margins analysis, profitability analysis, different horizontal, vertical analysis. All of these different kind of analysis is taken care of by the CFO and their team. That is where we cover all of the examples in the financial analysis module. Then comes storytelling and presentations. Like I mentioned to you, you need to know how to communicate your data story to the business teams. That's where we look at the storytelling best practices, the frameworks, practical examples, the presentation best practices. What have we used? Asif and I have used in our CFO presentations or management presentations. All of those things are covered in the storytelling and presentations module. And then comes strategy. Remember, as and when you start getting senior in your careers, your senior management will start talking a strategic language. At that point in time, if you don't understand what actually strategy is, then you will fall behind. So that is where we have covered all the essential strategic tools and correlated them with how FP&A can support in these strategic tools. That's what is covered in the strategy module. And then comes business partnering, practical examples on how do you collaborate with HR, how do you collaborate with business development, how do you collaborate with sales teams, IT teams, all of those examples from both Asif and my tenures we have covered in the business partnering module. So all in all, 10 solid modules, nearly everything that you require to be great at FP&A. Don't just think about this as a course or a certification. It is Asif and my 20 plus years of experience that we have put into this 6-month program. Now, what is the eligibility criteria for the CGFPA program? You need to either have a bachelor's degree or a global equivalent in finance, accounting, or business. Alternatively, you may have any of the professional qualifications like CA, CPA, CMA, CFA, ACC, or any accounting qualification of your respective country. Okay. We don't claim to be a substitute for these primary qualifications. In fact, we are a supplement for these qualifications because we know that some of the practical aspects are out there in the real world, are experiential in nature. That's what we are trying to bring through this program. We are also CPD UK accredited. You can claim any continuing credits in your respective accounting qualifications as well. Now, how do you get the CS certificate? Two conditions. One, there'll be live classes on every Saturday, okay, for 2 hours. Just for 2 hours. You need to complete those classes. At least 50% of the attendance should be live. And then submit the assignment or a capstone within the stipulated deadline. Typically in month number 5 or 6, there will be a certain capstone project that you will need to submit. All the guidance and everything will be given around that. Don't worry about it. Once you do these two things, you will be eligible for the final examination. The final examination is a proctored exam, 2 hours, 50 questions, 100 marks, multiple choice questions examination. And once you complete that examination, you will be awarded the CGFPA certificate from FPI. We are a private body at this point in time. We are not associated with any other accounting bodies. I just want to put that disclaimer out there. Okay. Now, the ROI for a valuable course like this, which can truly fast track your career by a few years, I leave it to your imagination. The course fee investment in this program is $16.95 USD. There's also an option to pay in 5 equal installments. Then this program is for 6 months. Roughly about 3 to 4 hours of your time investment is required. 2 hours for live classes and about 1 to 1.5 hours for your own study, self-study, pre-reading. We give you some pre-reading case studies, simulations to go through. You need to complete that and come to the classroom so that we are able to utilize the classroom for high quality discussions. Okay. The current batch has already started on 27th of September. This is the orientation date that you see on the screen. The current batch has already commenced on 27th of September. The next cohort will most likely start somewhere at the end of December, January. So you can join in, complete your applications, be on the wait list. Typically, we have some attractive early bird offers. So you'll be eligible for all of those things if you just sign up and fill in your application. Whether you take up the CA program or no, that's up to you. But at least fill in the application, let the team check the eligibility, come back to you with the requirements, right? And for the CGFPA cohort 6, which has just started, only one session is over. Just in case if one of you or one or two of you are in a hurry to complete the course, let us know or DM Asif or me. There have been a couple of postponements to the next batch, so we can accommodate 1 or 2 people at max. So if you're wanting to come and join this batch itself, then please DM Asif or me and we can try and accommodate you in the current batch itself. But otherwise, fill in the applications. Asif has shared the brochure link and the application link in the chat box. Make sure you fill in the applications, let the team check your eligibility, and then come back to you with the offer for cohort 7. Okay. Again, don't just take our word for it. There have been tons and tons of testimonials. Many of them have been able to transition into FP&A roles. Many of them have been able to implement a lot of frameworks that they learned in their existing roles as well. Right? You can reach out to any of your alumni on LinkedIn, or if you want our team to share their phone numbers with you, happy to share their phone numbers, talk to them, understand how CGFPA has been helpful for them, and then take a call. Okay. FP&Ajobs.com. I just want to mention that FP&Ajobs.com is our latest initiative where we're trying to build, bring recruiters and, candidates on one platform for any FP&A hiring. What I suggest is that it's a free platform. So just go ahead and sign up on FP&Ajobs.com today. Complete your detailed profile there so that if there are any vacancies, then our teams can reach out to you for those vacancies as well. Thank you. Have a great evening. Bye-bye.